Well, we think growth will slow a little more in China in 2024, not as much as consensus forecasts are expecting. And I do think that the authorities have signaled an intent to make sure that any deceleration is gradual. We saw the issuance of a central government bond for 1 trillion RMB. That was a pretty high-profile way of supporting the economy. We're seeing growth in our forecast slowing about half a point from 5.3 this year to 4.8% growth in 2024. And we think more measures will be needed, particularly on the fiscal policy side, to keep that deceleration gradual, given we've basically seen the reopening boost from dropping COVID restrictions, and we still have the housing downturn playing out in 2024.
And in respect to China, because obviously when we got those last inflation numbers, we could look at it as a one-time aberration, but we could also look at it as a signal that those deflationary pressures are still very much prevalent. How much of a concern would it be? And I'm not suggesting that this is a definitive, but if we were to see a significant recession in Europe, a significant recession, or perhaps even just a mild recession in the United States, and then what that would mean because of the export environment for China having perhaps a lot of product that they can't move, would that play into, in any way, shape or form, the inflation or deflationary environment in China moving forward as well, as a risk?
Certainly, if we saw the kind of environment globally that you're describing, we'd be worried about more downside pressures or deflationary pressures in China. I just want to emphasize we don't expect a recession in the U.S. in 2024. But as you noted, we did see year-on-year decline in prices in China in the latest October data, down 0.2%. Now, a lot of that is actually food prices. So from the standpoint of average households, this isn't a bad thing. Food prices are going down. Elsewhere, inflation is mildly positive. So core inflation was up 0.6% year-over-year. We don't really think about this as broad-based deflation in China. We're not especially worried about it near term. That said, if we did see another very tough year for exports, you probably would see some incremental downside pressures on goods inflation within China.
So from, I suppose, the perspective of the rest of Asia, if it plays out the way that you're suggesting in terms of China, and let's just give a little bit of leeway, perhaps a little bit better, perhaps a little bit worse, where are the places that are going to be most sensitive to any prospective downside in terms of nations that people should be mindful of?
Well, on the export front, we do think manufactured exports and trade could be a little better in 2024. We've already seen some positive signs in some of the economies in Asia that are more levered to tech goods exports. So I'm thinking Korea, Taiwan, actually Vietnam as well. All of these places have seen a pickup in exports over the last several months that's pretty noticeable. That hasn't yet broadened out across the region or broadened out as much in terms of sectors, but those are a few places where we see some upside. Should we see kind of a weaker global environment with recessionary outcomes in other parts of the world, those economies would also be pretty sensitive to that in terms of the likely impact on their exports and growth.
Andrew, really quickly, because we are almost out of time, just in terms of India, what's the top line case here? Should people be buying into the hype that the growth is just going to keep on chugging along?
The top line is India is still in a favorable setup with good demographics, probably benefiting from regional supply chain diversification, reduced sensitivity to external shocks, and so benefiting from some of the reforms in past years. So we continue to think that it will grow 6% or better in coming years.